Well, Excellencies, ladies and gentlemen, let me welcome you here today at Europe House, the joint facility of the European Parliament Information Office in the Netherlands and the European Commission representation in the Netherlands. Europe House was created 3 years ago to be a center of focus for debate and discussion about all things related to the EU. And therefore it gives me great pleasure today, on behalf of the Lithuanian Embassy in the Netherlands, representing the Lithuanian Presidency of the EU Council, and also the European Commission representation in the Netherlands, representing clearly the European Commission, the executive, to a debate and discussion here on what I would say 3 themes: recession, reform, and recovery. And therefore it gives me great pleasure to announce our keynote speaker, Mrs. Ingrida Šimonytė, who is the Deputy Chair of the Lithuanian Central Bank, but formerly the Minister of Finance of Lithuania during a very important period of economic reform. She will give a keynote speech, which will be followed by a discussion with Professor Lex Hoogduin, currently Professor at the University of Amsterdam, but also formerly member of the board of the Dutch Central Bank. That discussion will be moderated by Mark Kranenburg of the NRC Handelsblad newspaper. But we also hope that you will participate in that discussion on this important theme of reform, a theme that currently is also very actual and present in this country, the Netherlands. We hope also that afterwards you'll use the opportunity to have an informal chat with both our speakers and with each other during the reception offered by the Lithuanian Embassy and the European Commission representation. With that introduction, let me hand over to Mrs. Šimonytė. Would you like to take the stage? Thank you.
Thank you very much, and I will start my speech, which would be more in the form of presentation, and I will try to show you some illustrations about recession, reform, and recovery. And something should be switched on here, I think. Yeah, and here you have the first picture, and I would like to start from recession. And from this picture you see, although this is not a full line of Lithuanians' economic development after the independence was restored, but just the pre-crisis numbers, crisis in 2009, here, and then the post-crisis period. And what can we say about the recession? The country has suffered a very severe recession in 2009, and there were like two major reasons to that. First reason was purely home-brewed problems that I will talk about later. And the second reason was most probably what we all experience as a global economy, the global processes that became very visible after Lehman Brothers. But let's start from some past years. In 2004-2007, Baltic states were named Baltic tigers after Asian tigers, as those were the fastest growing economies in European Union. Just after accession, the growth accelerated very rapidly. And then there were basically no sign of whatever unease about this growth, because everybody read the economic textbooks and were saying it's just convergence, baby, it's all right, because you are supposed to grow faster, you need to catch up with the older economies. And that's how people take this growth as a very good sign of a healthy convergence in new member states. However, some things were overlooked, and those things were overlooked in many countries, and that's why now we are talking about macroprudential issues and macroprudential supervisors and systemic risks and all that stuff, which is very important as we see after the crisis. But then it was just a very good approach to very good numbers, and this growth was really brisk, although in 2008 some deceleration has been seen, and after Lehman Brothers, this deceleration became a slump. So this slump was kind of a had roots in internally brewed problems as well as in external situation, as there was a shock to non-tradable sectors due to credit crunch and shock to tradable sectors due to lack of demand for our exports. That's why this slump was double-digit in, you might see it in 2009. But everybody was talking in 2009, and I remember this debate how the situation will look like in the economy. Will that be L type of recession? Will that be U type of recession, double V type of recession, or whatever type of recession, all the letters in the alphabet you can imagine. And here you can see clearly that in case of Lithuania and in case of all the other Baltic states, other two our sisters, that was definitely a V-type recession, and growth came back to Lithuanian economy already in 2010. And of course, this positive trends of economy now are sustained, and at least to the Commission forecast and the forecast of many other forecasters, the prospects of growth for Baltic states and for Lithuania in particular are to remain one of the highest, at least for the medium period, in European Union. So this is the picture about the problems we tended to overlook. Once Lithuania joined the European Union, many external actors and players thought, this economy has a huge potential to growth. There will be huge gains due to convergence. We need to invest there. And this is how, very similarly to some Southern Europe economies, we became more and more dependent on credit inflow that flooded basically to the countries. And here you see the picture for all the Baltic countries via the banking channel. And loan portfolio to GDP ratio, you can see the increase during 2004-2008. That was really a huge increase for like 3 years period. And there is part of the answer why this recession in 2009 was so huge. Just because after Lehman somebody came and switched off the credit. And of course, since the credit was fueling the non-tradable sectors first and foremost, and internal consumption, in 2009 internal consumption and investments in the form of construction had to take a hard hit. Construction lost approximately half of its output in 2009, and that was a very, very significant loss. However, and exports lost to general global economic conditions. And in 2010, when growth came back, it came back on account of exports. However, recently, more and more, we see the consumption and the investments, this year especially, adding up to the growth, and growth is kind of rebalancing from standing on one export leg to standing on both legs, export on one hand and then consumption and internal demand and investment on the other side. To get a sense why the country is so much dependent on what's happening outside, you can see the level of openness of our economy and the share of export in GDP. You can see that it's a very significant numbers, and from this you can judge that this is not only a small but also a very open economy. And this is a strength and also a risk, because as in 2009, this dependency on export, or this large dependency on foreign demand for our products, the lack of demand rather was a kind of a second shock that came in a very wrong time. On the other hand, you can see how from 2010 the performance of export was really remarkable, because our loss on export in 2009 was not different to other countries that are heavily dependent on export, for example, like Slovakia or Finland, other countries heavily exporting their production abroad, and the conditions and the reasons for that were the same, because there was a lack of foreign demand. However, from 2010, where the global prospects improved to some extent, and competitiveness within the country improved due to reforms undertaken, we were seeing constant increase of export year to year. And what is especially interesting, that in 2012 and 2013, despite the fact that the global environment remains quite complicated, and it was especially complicated in 2012, still the growth of export, although not in that levels we saw in 2010, 2011, are still very, very significant. Of course, this dependency on credit and dependency on consumption, and consumption as the major source of growth before crisis, was reflected on our current account that was in double-digit deficits before crisis. And you see this huge turnaround in 2009, of course, mainly due to decrease in imports, no surprise, cyclical effects. However, from that year on, although the position has worsened a little bit, one cannot say that there is a risk or there are signs of any unhealthy developments, as the increase of current account deficit in 2011 was mainly due to increase of imports of investment goods that stopped to some extent in 2012 when global environment became kind of worse again. But the interesting thing to mention is also that in 2012, the current account deficit was really very modest, nearly negligible, and in that year, for the first time, I think for the first time since the restoration of independence, Lithuania recorded a trade surplus. That never happened before in our economic history. So one imbalance was in the economy highly dependent on foreign credit, huge current account deficit financed via banking system, and Lehman Brothers, and all the sudden stop of credit, and of course the kind of return to a different situation. And of course that couldn't go unnoticed in public coffers. And that's how Lithuania, from quite a modest level of fiscal deficits, that before 2008 were in the area of 1% in headline deficit, in 2008 already breached the Maastricht criteria, and in 2009, as you might see, the deficit reached nearly 9.5% of GDP, and that was with huge consolidation measures that have been undertaken by the government in 2009. Without those measures, our estimation was that the fiscal deficit, the headline fiscal deficit, would have comprised nearly 15 or 16% of GDP, and of course would be non-financeable. And of course, in 2010, there was an additional pressure on the government and on the public finances, as unemployment started to pick up rather rapidly, and of course there was a need for automatic stabilizers to play, meaning that unemployment insurance have increased in cost. However, the revenue from wage bill declined at the same time, so there was an additional need for the government to take consolidation measures in 2010. But since 2011, we can say that the major job of consolidation and deficit reduction is actually now being done by the economy, given that there is just an expenditure freeze, the general expenditure freeze that was kept by the government in 2011 and 2012 and 2013, and the revenues coming from economic performance were kind of diverted towards the deficit reduction, and that's how we managed to end up in 3.2% deficit for 2012, and that was the reason that Commission offered or proposed to the Council to lift the EDP procedure against Lithuania, given that this margin of 0.2 is attributable to pension reform. So the Commission and the Council decided that Lithuania fulfilled its commitment to reduce the deficit to Maastricht criteria, and EDP procedure has been lifted. Here you can see a comparison of some countries that had undertaken different sorts of consolidation measures, and you can see the change in general government balance from 2009 to 2012, and definitely here you see that the champion in the consolidation is Latvia, that has changed the position by nearly 9 percentage points. Ireland and Lithuania very similar, more than 6 percentage points, and some other countries in a row. One can clearly see that the amount of consolidation was very significant. And if you measure that in terms of GDP, that was roughly in the area of 12% of GDP in 2 years, 2009, 2010, focusing primarily on expenditure, which is what the economists would suggest as more sustainable consolidation, to some extent, 1/5, I would assume, on tax hikes. And nearly all sorts of expenditures have to be cut to one extent or another. But one must remember that the major source of imbalances, at least fiscal imbalances, was the very rapid growth of expenditure in 2007, 2008. So in most of the cases, that was just a partial revision of the expenditure increases that were very recent. Of course, that was not easier for people to understand that because it was just a recent increase, because people tend to remember the increase for some time but the cut forever, and that didn't help much. But if you look at a kind of where did we have to come back to, so I would say that we had to come back to some juncture of 2006, 2007, but no way to 1950s or whatever old times and complicated situation. Of course, once problems started in 2008, everybody around was betting on simple nominal devaluation of the currency, something that, because anyone of us who've read an economic textbook know that there are like two options for a country with a fixed exchange rate. One option is a nominal devaluation, and the second option is an internal devaluation. And every author would write, this is impossible to implement, so we would give this as a matter of theory, but not as a matter of fact. And of course, everybody was expecting a nominal devaluation in the Baltic countries, and you can see that reflected in the spreads. Why that was not an option? There were several issues why that was not an option. First is that you devalue in order to boost your exports. Given the high contents of imports in our exports, there was not that clear outcome whether the nominal devaluation would have boosted the exports really. And what we see from results of exports in 2010-2013, we clearly see that that was unnecessary because export was doing very well with internal devaluation. Then there is less need to kind of touch on nominal items like wages, pension, and stuff. If you simply devalue, then there is less need of consolidation, which is not necessarily the case, because as we were making estimation how big the consolidation would have been if there were a devaluation, then the consolidation would still have been rather significant. Two major reasons why it has not been done was first that this time of brisk growth and this brisk growth of credit was the time where people decided to undertake significant amount of euro-denominated debt rather than litas-denominated debt. Why? Because everybody was expecting Lithuania to join Eurozone in the nearest future, and the euro loans were cheaper by something like 2 cents or whatever. I mean, there was basically no difference, but the euro loans were slightly cheaper. So people really from rational calculations decided that they can undertake foreign denominated debt, and that was denominated in euros. And at the end of 2008, 70% of private debt was denominated in euros. So if there were to be some devaluation, then the increase of private debt would have been significant, and banking sector would have to kind of consume that, and it could have been rather complicated. And of course, the last but not least is an issue of confidence. Once currency peg was introduced in 1992, it was introduced in order to bolster the trust in national currency, because we were a newly restored independent state that wanted to have its own currency, wanted people to trust in the currency, and you know that people do not trust in the new currencies unless there are measures that kind of preserve their savings and allow them to rely on the policies of the government and central bank. So that's why the currency board has been introduced, a fixed exchange rate has been introduced in all the Baltic states, ruling out basically the possibility for the central bank to print out money and to induce inflation. And the major reason why all this has been done exactly to avoid the nominal devaluation that would have completely destroyed the confidence in the national currency. And once this confidence would have been lost, then, I mean, we know from experiences in other countries that if you have a devaluation once, then you will have it twice, thrice, and many times in a row. Of course, sometimes it looks like the poor governments in Baltic states were doing nothing but just consolidating, cutting, chopping, and doing all the nasty job. No, the government managed to do quite a lot of other things that have helped the country to kind of stand on more sustainable footing for the future. One was the issue of foreign direct investments that was overlooked before crisis because there were flows of cheap credit. Then government turned to the hunting of investors, actually trying to offer them what we have best in our country in terms of people, IT capacities and skills and everything that a small country can offer rather than natural resources or big markets. And we were quite lucky in the respect that in the worst times of the Lithuanian economy, we managed to persuade names like Barclays or Western Union to come to Lithuania and settle their service centers in our country. That proved to be an extremely lucky investment, and the companies are really happy and expanding at several times more than was their initial intention on this investment. EU membership, of course, was one of the most important factors that helped us to go through this painful situation. Here you see in the chart the green bar is the inflow to the country of the structural, agricultural, and all other sorts of funding. The red bar would be the payments to EU budget. It's clearly seen that we are very much a net receiver of EU funding, not a very popular notion in a country that is net payer. But I must say that this was an extremely important factor that helped us to kind of get through the situation, given that there was a scope for rational fiscal stimulus within agreements with European Union and structural funding documents, programming documents, to kind of put some cushion to our business, use some financial engineering for small business, financial access and all sorts of things, rather than just going and building on more debt that was very expensive at that time. And so this was to a very large extent used by Lithuania. Our numbers of EU funding absorption capacity were and are highest amongst the EU member states. And of course there was also a moral issue, a moral support European Commission and other institutions, of the policies undertaken by the government that somehow brought also more confidence to what has been done. One issue very important when you have crisis is how this crisis goes in pair with banking sector. And this is something we were very lucky to kind of avoid, if at all possible, given the structure of our banking system. You can see that the sector recorded very significant losses of nearly 1 billion euro in 2009 due to provisioning for bad loans. And of course, the question was, in 2008, beginning 2009, once those provisions will be recognized, there will be a huge shortage of capital. And what the government that is already trying to cope with a slump of -15 and the spreads at 10% for 5-year bonds, what the government will be able to do about this banking issue. And the lucky thing was that we had nothing to do, as the parent banks, the shareholders, showed necessary commitment to their subsidiaries in all the Baltic states, not only Lithuania, and all the necessary capital has been provided, and liquidity where needed was provided, and so there was no need for government intervention whatsoever into the banking sector in that very, very dire economic situation. And as you might see, the sector returned to profitability. The levels of bad loans are constantly decreasing, and just yesterday, I think, the Moody's have increased the outlook or improved the outlook for the Scandinavian banks present in the Baltic markets. That previously was negative, and now they consider this outlook to be stable. So whether everything is okay, definitely not. And there are many critics outside, namely Paul Krugman or others, who would say that all that was done in Baltic states and all of that is done in Southern Europe is actually nonsense and a suicide. And one of the major numbers that you would use as an illustration to that is the unemployment. And yes, this is correct. The hike of unemployment, you see that in this red line, was very significant in 2010. That was nearly 20%, 80% of unemployed people in 2010 at its peak. But this hike was, of course, attributable to the fact that before crisis we basically had no unemployment, booming construction sector, everybody working in construction, and the unemployment of 4% was just people who were not willing to work. And of course, this hike of unemployment was quite a painful one. But since 2010, when the perspectives of economy started to improve, the unemployment started to recede, and at a rather speedy pace. And one might say, oh, it's because of emigration. This is not the case, as a matter of fact, because this part is because of increasing employment. And basically, increasing employment reflected the improved labor market conditions after this recovery of exports. Of course, now we can see that there is a different trend in European Union in general, where you see the unemployment still picking up, and trends in the Baltic states, where unemployment is definitely going down, and the forecast is that the unemployment will stand around 10% next year. The problem is here, as I think in all the countries of Europe, that the bigger and the bigger part of this number is becoming structural. So there are other issues rather than just economic cycle that need to be addressed in order to get those people back to work. And of course, the other residual is the debt, because despite the fact that the consolidation was significant and measurable, the increase of debt was also quite impressive. Now, Lithuanian debt stands at 40% of GDP. It should stabilize around this point, despite the fact that there will be some modest deficit in 2014 and presumably in 2015 as well. But of course, this is kind of today's debt is the outcome of yesterday's wrong decision. And we know that the level of debt is elevated in all the European countries, that the increase of debt on average in European Union and in Eurozone was significant, 20 percentage point and more. And before crisis, this small, tiny, now one say debt of 16% was fifth lowest in the European Union. At current juncture, our debt of 40 is sixth lowest, which reflects that the benchmarks have also shifted a lot. But of course, this is a problem because elevated level of debt still limits the scope for the government to have fiscal buffers, for example, economic problems that might occur somewhere in foreseeable future. So this is why the further consolidation towards the medium-term objective and balanced budget is, to my understanding and to my opinion, a must. And this should stay in the medium-term plans. And apparently, it stays in the medium-term plans of the current government for the fiscal policy, in order to kind of regain, at least at some juncture, regain at least some fiscal space to be able to react to problems that might occur somewhere in the future. And this is the end of my presentation. I want to make one disclaimer. It's not my intention to teach anybody anything, because sometimes the experience of Baltic states is being misperceived as some arrogant bastards who've suffered a lot and have a huge unemployment and all sorts of problems, now try to teach somebody that they should be fiscally prudent and should follow the path. No, this is just to illustrate that something that is known as a concept from economic textbook as not workable actually can work under circumstances that were applicable in our case. We were first to hit in 2008. There was nobody behind us to kind of put us a cushion and to help us just to do nothing. That was not the case. We need to react, because otherwise we would have had a deficit we wouldn't be able to finance, to put it simply, because the money costed like double-digit in 2009 and the end 2010 and 2008. This is what pushed us to kind of get to grips and understand where the problems lie and look for solutions. But it doesn't mean that this is a universal solution anyone can apply and will definitely get the same result. No. But the notion would be that it's better to reflect on the problems and react to the problems once they occur, rather than hope for some Christmas guy coming and sorting out everything at some juncture and leaving everybody popular, loved, and actually unaffected. I don't think this is the case. So that was my point, and thank you very much.
Thank you very much. First of all, for inviting me to this presentation and to this session this afternoon, and secondly, for the presentation that we just received. There's a lot to comment on. I will not take too long, but what I will do is to invite you a little bit to do what you at the end said that you don't want to do. And you in your presentation, you were indeed very modest. You explained what you had done, and my first response to that is I find it is impressive what you have done and achieved, especially the very quick rebound in GDP growth, in consumption, and also in the development of unemployment. So what I would like to do is basically I have a couple of questions on how you did achieve it, a little bit elaborate perhaps in the discussion on some aspects, and then I cannot resist starting to think what does this mean, first of all, for the way we try at the moment in the periphery, as it is often called. You know the countries I mean, to make the adjustments. What can they learn, or perhaps not learn, from what you did? And feel free, I would say, to reflect a little bit on that. We will not tell anybody else that you try to teach us here. And the second thing is, I just want to confront what you just told us about your country, and that's even a more brave exercise with what's going on in the Netherlands at the moment. So basically three parts, and try to do it very quickly so that we can discuss it further, and also that you can participate. First, what I would like you to elaborate a little bit more on, I would like to know how you managed to get, let's say, the political support for such packages in your case. How did you manage to do that? That's one element. Another element is how did you manage to get a package in which you had 80% expenditure cuts, and I would say only 20% tax increases? Most of the time it's easier and quicker to increase taxes, but you managed somehow to have a very favorable relation between the two. And then finally, on, let's say, your own case and your own performance, what I would like to know a little bit, if you look back, knowing now what you know, and listening, for instance, to the criticisms that you mentioned by people like Krugman, is there anything going back where you would say, well, if I were now back in the period when I had to decide, I would do that differently? You focused, I would say rightly so, very much on the exchange rate element, because that's also the focus of the more general debate. Is it possible within a fixed exchange rate regime to make the adjustment without incurring very high costs? You deliberately have chosen to maintain, let's say, the currency board and the peg to the euro, with the results that you have shown. So probably you said, well, that was the right choice. But were there other elements in the whole procedure, as it were, where you would say, well, that I would now do differently? So that's on your own case, and then secondly, on the, let's say, the packages that we have at the moment for the other euro area countries. The impression is, you look at your performance, that's in a way you're doing better. The adjustment is going quicker, and you I think rightly so at the end you said, well, things depend very much on the specific circumstances. But let's now assume that we would invite you to go to one of the peripheral countries, then you would have to assess, let's say, what specifics there are there, and how you would look at how you would then, let's say, if you were asked to do that from scratch, develop a package, would you? What things would you look at? And perhaps, if you are very brave, could you say, well, there are some things I know that I would definitely do differently, and you may whisper so that we will not tell immediately that you told us so. And again, I find the of course the most really interesting thing is this whole devaluation fixed exchange rate thing. There it's really important to know and to understand, try to understand together whether indeed that can carry over to other countries inside a monetary union, because that's the basic argument against the packages, I would say, and there perhaps we can tentatively try to draw a lesson, or at least know what things we have to look at before we are able to draw more definite lessons. Then on the Netherlands, I must say, if you see this story and you know the debate that's going on, very close to where we are on the Dutch budget, it's almost a kind of feels like a kind of a disconnect almost to me. Let me first say, and that's very much in line with what you said at the end. The situation, of course, the Netherlands and Lithuania is very different. The size of the economy is very different. The phase of development is very different. The balance of payments is radically different. Huge deficit, double digit. The Netherlands has almost a double digit surplus, has surpluses since the early 80s. So if we have a problem, it's that we have too high a surplus and not the other way around. So that's diametrically opposite. The level of government debt, it's still here. You were let's say, critical about the 40% level. We are approaching 75% at the moment, coming from 48% before the crisis. I think it's also very different, the size of government relative to GDP. I think there will also be differences in the pension system, on our healthcare system, and all kinds of other structural aspects of the economy. But nevertheless, if I look at what we have achieved, and I would here use the quotation marks, what we have achieved since the start of the crisis, and just to contrast it and to see whether there perhaps are some lessons that we can learn. We started out with a surplus on the budget in 2007, 2008. A surplus on the budget. We allowed it to turn into a deficit of 5.6%. We are now almost 5 years after the crisis, struggling to bring back that deficit below the 3% level. If you look at the budget in structural terms, we have managed to reduce it from 4.1 in structural terms to 1.5 if we implement the budget as it has now been proposed. So that's an adjustment of 0.5 percentage point per year. And the debate is, aren't we going too fast? Do we destroy the economy by, again, taking cuts of 1 percentage point of GDP? And I agree with you that you should be very cautious in implementing or applying a lesson of one country to another. There are huge differences. But let me then put it that way: isn't your experience in a way not encouraging to the people that are saying, well, you should not overdo the fear of, let's say, really destroying your economy if you try to reduce your deficit by 0.5% in structural terms, because that's the debate, and So that's the one. That's how do you look at that discussion? You take your own perspective, and the other one that I find interesting, and I'm just interested in your views and how you look at that. You refer to structural reforms, and you said that they are important, and you also said, well, we have implemented some structural reforms in parallel with the cuts. And the interesting thing here is the discussion in the Netherlands is that there is a trade-off between taking deeper structural cuts in the deficit and reforms. So if you do more reforms, you are able to do less in terms, you should do less in terms of deficit reduction. Let me just give my own position there, so that you know why I'm asking the question and what kind of an answer I would like to receive. To be honest, I have always found that trade-off a bit misleading. Let me put it that way. In the Netherlands, for the reforms that we have in mind are in the housing market, in healthcare, in the pension sector, in particular, and I see those reforms in those sectors more as complementary, rather than that they are in a substitute in a way of a trade-off. Why? Because I think that, for instance, in the housing market, where the main issue is tax deductibility of mortgage rates, if you would completely, let's say, abolish that, let me go to the extreme, but give it back in the form of lower taxes, that ex ante wouldn't change the budget at all. And it may well be that if the positive impact of lower taxes is relatively high, which may be the case if you are in a situation where you have relatively high tax rates, then it reinforces also the consolidation process, and it's not a trade-off between the two, but they are complementary. So my question is, did that discussion come up in your case? What was your experience, and do you have views more generally? I think I've now asked more questions than any person can answer in 5 minutes. So let me stop here, and as far as I'm concerned, let's start the discussion. But that's up to the moderator. Thank you very much.
Please, take a seat over here. So this microphone is yours.
Okay.
This one is mine.
Great.
Okay. Well, thanks a lot, both of you. We had some real lessons, I think, and it was a pity, and I say it what you said, that you said at the end, you gave a disclaimer when you didn't want to teach. Well, don't be afraid. The Dutch are used to teach whole the world. So please teach us. My problem is I had many questions for you, but Mr. Hoogduin raised them. And of course, I hope you have also some questions, because then we have a real debate. So don't hesitate to interrupt. So don't wait first till the end. But if you have a real question when we are debating, please raise your finger and come with your question. But well, you had so many questions, but too many. But that's not the problem. The first question was also my question, but because it's amazing after your story, you told me that you are sitting here and not wounded as well, but because how indeed how did you get that political support?
Well, the funny thing is that I tend to walk on my feet a lot. And I was walking to the ministry almost all the time, except it was raining cats and dogs. And some of my friends were asking, aren't you afraid kind of to be on the street? Somebody might kill you because of the reduced salary. But the funny thing is that I've never ever during my term in the government experienced any major aggression to my person. Or what, I mean, people sometimes would say some remarks and would say your austerity tires us or whatever, but nothing really, nothing special, so to say. But on this political issue, there were several factors that added up to the success. I mean, the timing when the problems became really big, that was the end of 2008, coincided with the elections in the country. So we had the change of the government. We had a very strong coalition having a very substantial majority then in the parliament. A coalition of not like an ad hoc people, but kind of like-minded, at least the core of the coalition was like-minded parties, conservative, liberals. And that was there was quite a substantial understanding within this new coalition that something needs to be done. So that helped a lot, because a lot of was done in the first months or first year in the office. Later, I will not hide, there was a consolidation fatigue. Colleagues, ministers were tired and angry. They had their own kind of fields of responsibility to somehow to manage within those limited resources, and I really feel quite pity for that, because I know how hard it is, but still there was a kind of a general understanding that something needs to be done. It was quite easy on a political level. It was less easy on a level of society, because people were just hearing about fiscal stimulus here and tax cuts there and expenditures for infrastructure that place, this place. And that was the only freaky government, apart from other Baltic governments, that is doing absolutely opposite. And everybody was saying, all of a sudden everybody became so Keynesian, saying that you need to stimulate. What can you stimulate when your spread is 10%? I mean, don't be stupid. But of course, society doesn't know how the money come and where do they come from. So that was quite complicated. And first frustration of the society was there, because, well, what changed? Just a year ago, I was getting a pay hike of 20%, and all of a sudden, somebody's just taking away 10% of my salary. What happened? Just the election, because of Lehman Brothers. What do I have to do with Lehman Brothers? It's foreign, the United States, I don't care about it. And there was kind of general unease, and of course, as usually happens, opposition was playing to that this is an extremely incompetent government doing all sorts of stupid things, and they need to do something completely different. But once problems in Eurozone started in 2010, there more and more understanding, because there was already a turnaround in Lithuanian economy. There were numbers coming out positive and more positive every time. Of course, unemployment was still very high, but at least the export was giving high hopes. And then the understanding was that maybe there was some sense in what this government was doing, but that was not easy. I mean, the government invested a lot into sort of debate with employers, employees. We don't have a big coverage of trade unions in our economy. But still, you try to have them on board as social partners, and somehow to persuade people that if you live in a area of currency exchange that is fixed to euro in this case, then you need to mind this. And there are no many sweet solutions to the situation. Of course, we had then debate, a very funny one in 2009, that maybe we should move now to floating exchange rate. So remembering where Iceland ended, I mean, where Icelandic krona ended in 2008, I would bet that the exchange rate of the devaluation would be not 50%, but maybe 80 or whatever percent, which would have mean an immense problems to the household and to society, to general public, to whatsoever. So basically, of course, once you have a nominal devaluation on one hand and this complicated internal devaluation, but of a short period of the structural mismatch, because that was just period of 2005, 2007, I mean 3 years. It's not like 20 years like you have in other countries. That's why I find it problematic to kind of apply the same pattern, because you are operating in different society, in different environment there. Then I mean, this is not a candy and that is not a candy, but still you need to pick the lesser evil, and there was an agreement that the lesser evil was in this internal devaluation. Of course, the government had to kind of show the example, so that's why the first thing to do was the cut in government official salaries by 40, 30 or whatever percent.
Was that the toughest measure you had to take?
No,
but for the people it was.
People liked it, but they thought maybe you should cut your salary to zero because you are such a stupid government. You cannot bring back the growth just like this. But I mean, if you want to say something to people, then you have to show your personal example first, and then ask people to make sacrifice.
Let me turn to Mr. Hoogduin. Do you think you raised the question? How did you get political support? Is that we have at the moment a debate in the Dutch Parliament about our budget for next year? Do you think that's the real problem here in the Netherlands, the political support?
I think the problem in the Netherlands is that there is not, let's say, that feeling of crisis.
There's no awareness.
The pressure on the financial markets. That was the case in Lithuania. You had a spread of, say, 10%. We are in AAA.
Sorry, use the microphone. Yeah. Sorry for that.
That's better. I think one of the main differences is that, as I understand it, listening to the story, is that in Lithuania there was really a crisis. You were forced to do something by the pressure coming from the financial markets, having a spread of 10%. Then you cannot afford doing nothing as it were. So you have to do something. If I look at the case in the Netherlands, it is very different. We are a AAA country. What happened during the crisis was that our spreads to Germany went down initially, and our interest rates went down. So there is no pressure at all from coming from the financial markets, and you could even make the argument, and some people are making the argument, the government has never borrowed at so low interest rates. Why not borrow more at this moment while you can borrow so cheaply? I think that's a very important difference.
So we have a kind of in the Netherlands a hidden problem.
I think what in the Netherlands, but that's my analysis, and I underline that because there's no consensus in the Netherlands about it, and I'm certainly not in a majority position there. But my interpretation of what has happened in the Netherlands is that we, let's say, in the past few decades, perhaps already starting in the 70s, we have grown up to a number of things that are an illusion. One is that we thought that we could retire at age 65, preferably 5 years earlier than that, then have a pension that's 70% of your final salary, that's compensated for inflation. That's one thing. Second thing, we have become used to the fact. We came to expect that your house is increasing in value every year by double-digit figures, so you can take a second mortgage and you can pay your consumption partly out of borrowing against your house. Then in healthcare, and especially care for the elderly, we have come to believe that it is up to the government to provide that care, and that it is freely accessible to everyone. That has led to a situation where our healthcare spending on this part is growing by 5-6% per year. And if you compare how we have organized our healthcare for the elderly, then what you see is that we collectively spend twice the amount, I think, of the UK, 3 times France, and 4 times Germany. And that has translated itself into a style of living where people find it normal that the state takes care of their parents, that they don't have to worry about, that it's not their business, and they can do other things during that time. More generally, we have come to a world in which we basically think that all the risks that you normally have to be taken care of by the government. So that means that there was 2 examples. 1/3 of Dutch people live in a house subsidized by the government. Social housing marks for 1/3 of the population. 90%, 90, has access to social arrangements. 90%. So that means that we have created a system where people expect the government to take care of all the risks and hazards that you have in life. That we have created expectations implicitly of almost paradise. And what we have discovered, and what was triggered in my mind by the financial crisis, that we now see that is not sustainable. And our response to that is not we have to adjust, but we feel depressed. We feel very depressed. And what is a very striking figure there, and then I stop it. I think I've conveyed what I mean. What is very striking there, if you look at consumer confidence since the start of the crisis, and what happened to consumer confidence in all the euro area countries, there was no country where the drop in consumer confidence was so high as in the Netherlands. Whereas we are still a very rich country. I think there are very few countries that have saved so much for their pension. The problem is not that we have not taken care of that, but we thought that we had saved enough to provide a pension that I just mentioned, and that's not the case. So we felt like living in paradise and expected things that can really not be provided. And now we discover that we do not live in paradise, but we are still very rich. But somehow it feels like we are poor, and that's the position. And people are then hesitant to adjust, and that's I think that's the stagnation of the moment.
Okay, that's good. I come to you, but one more question for you. When you hear this, what do you think of the Dutch? They're only complaining, but why?
Well, I don't think
the doors are closed. So
I don't think it's Dutch or Lithuanian or whatever. I mean, people would always strive to have more than they actually can afford, and this is natural. The question is whether you were really able to taste it for a longer time. And in our case, people get used to kind of get mortgage, buy a flat, which is not to their means of income, and you must have been betting that your salary will be increasing like hell for 40 years in order to be able to pay out this mortgage. But people still were tempted to do so because just it's a natural kind of, once you compare yourself to people in other countries, you think, oh, they can live on account of debt, why can't we? And I think that, and this kind of paternalism, and which is unfortunately very easily kind of enforced by politicians, is that the state is here and the state will take care of all your issues. It actually brings this relaxation and thought that now I will be living better than my parents lived, than my grandparents lived, and my mom was telling me that you are not allowed to buy more than you have income. I mean, everybody had the same concept back home when they were children, but it doesn't work in real life. It doesn't matter what your mother said you somewhere when you were 5 or 10 years old.
But here something very interesting has happened in the Netherlands, and that is that if you were raising the question that you asked, and you ask, let's say, a group of people, do you think that your children will have better than you? I think 20 years ago, if you raised that question in the Netherlands, 80% would say yes. And that's progress, and we are making progress. I think some 10, 15 years ago, that started to change. And if you now raise that question in an average Dutch audience, I sometimes do, then you will have 80% say no. There's no prospect of progress. And that's a reflection, let's say, of what I said. If you look at consumer confidence, people are very, very depressed. And I can understand that people are depressed after the financial crisis, but the extent to which it is happening is extraordinary in the Netherlands.
But it can also be a reason to support tough measures, to get that you will guarantee a better world for your children.
Yes, but that's
then it stops.
Yeah, but the difficulty is that people do not accept yet that things have to change. There are too many, let's say, also politicians, but they find supporters. I don't blame the politicians, that's so easy, but too many people who do not believe and don't want to believe that things really have to be adjusted, that we may have, let's say, a pension savings of 1 trillion euro, but that if you want to do what people have in mind, that you would need 1.5 or 2 trillion, so that you have to adjust. And as said, there's also, let's say, people are looking for arguments to postpone adjustments. And we as academics, economists, try to provide them also the arguments, because many of the economists are also not convinced. The trade-off that I mentioned, that people say, well, this is the worst possible moment to bring down government expenditure. There's a whole debate of what it costs in a recession to bring down government expenditure. Isn't it better to postpone it to a moment when the cost of cutting the deficit are lower? And let's take structural reforms, but let's do it in a way that it doesn't hurt the economy today. So let's announce today, and now I'm exaggerating a little bit to make it clear, let's announce today that in 2020 we will bravely take a number of measures. And that's of course easy to do. And
may I ask you, because is it also a task for a politician, or is it a task for a politician to lead the people instead of to follow the people?
Well, I think so, but I can say that my opinion, because I'm not a politician by origin, then I can't say things about politicians because I'm just an electorate. Yeah. I was working in the political position for 3.5 years, but I'm not a politician. So my understanding or my value in politicians is exactly that they lead the country rather than they follow the electorate. And this is maybe why it's so complicated to, I mean, in some cases, this bravery about structural issues would be part, at least, of the answer, especially if, I mean, you have no financial market pressure on you, and you have rather good conditions to undertake those structural measures that might even cost you at first to some extent. But the problem is that it's typical to think that, okay, if we now make it, we will suffer the political losses, and the benefits will be reaped by somebody in some 10 or 15 years. So then maybe it's not that interesting for us to kind of undertake it, and unless it becomes very pressing, then we will leave it for the time being. And this is, I think, how we come up to those issues that, because in case of Lithuania could have come to the crisis much more prepared. We had this windfall revenues coming to the budget, the growth of revenue was like 30% annually, budget revenue, and expenditure was growing by 35%. I mean, there was a possibility to grow expenditures just by 10% and leave this 20 remaining aside as a kind of the fiscal buffer. But then people think, what if I leave this fiscal buffer? If something happens, it's not me who is then the smart guy to use the fiscal buffer for the sake of the country. But if I increase the pension by 30% this year, then it will be my kind of achievement, and I will be able to claim that to my electorate. And that's how this problem of wrong signals or political cycle or thinking about the next elections rather than about long-term view makes people follow the electorate rather than lead the electorate.
I think in the case of the Netherlands, here we have a very specific problem. I think our governance model is in trouble. Let me put it that way. If you have to take tough measures, it helps if you have a mechanism to reach consensus in tough times. And we used to have the so-called polder model, very specific to the Netherlands, started let's say the 50s, 60s, where you had a society that was organized in what we call pillars, and the pillars were partly along religious lines and partly along let's say the more traditional political lines, and everybody was solidly in one of the pillars. So whatever happened, if you were in the Roman Catholic pillar, you read a certain newspaper, you voted for a certain party, you were a member of the union that's related to the Roman Catholic pillar, and so on and so forth. And that started to, and that was, and the pillars had different views on things, but there was a culture that you always were aware that you had to reach a compromise, and that was always the parties were prepared to look for a compromise. So that was on the political level, and then that was supported by what is the polder model, where you had the employers and the employees agreeing at a central level together, and then then also reaching compromises with the government. And that was how we governed the country. And that model has eroded, has more or less disappeared, I would say. It started decades ago already, when we let's say, religion became less important as an organizing factor. High level of immigration, where there were new people that were not part of any of the pillars. So what we ended up with is, at the moment, to make a long story short, is a very fragmented political landscape at a high level of volatility. Political parties cannot be sure of let's say, a kind of a core vote. You can go from 20% of the vote to 5% of the vote within 1 week, and because we survey every week what the support is. That's another interesting thing, but very fragmented and very volatile, the political landscape. And the, let's say, the polder model, the aspect employers-employees, has broken down as well. The unions do not represent more than 20% of the employees, and there's a very skewed representation, a little bit exaggerated. The members are older than 50 and represent the interests of the people 50 and older. At least that's how it's felt. And so there is no really ground for a deal between the employers and the employees. Now, recently, there's also some disagreement among the employers. So the whole governance model is more or less broke. And that makes it very difficult to reach consensus on the tough measures that have to be taken in the areas that I mentioned. And that's why we are muddling through, and that's why, let's say, the real debate should, for instance, be, do you indeed agree with me that we should really reduce government expenditure? Now the discussion is whether we should cut 6 billion or 4.5 billion, and that's a non-discussion, and that's where the focus is.
I saw some hands, and the gentleman in the back, yes, with blue. Please stand up and introduce yourself.
No, my name is Mr. Welt. Congratulations on your speech and presentation and the results of your remarkable quick recovery in Lithuania. Once again, you should be proud of it. My condolences for the Netherlands. After 5 years of struggle and fight, they still haven't made up their mind. Don't you agree with me that the root of all evil is not just economics, it's not just the fall of Lehman Brothers, it's a combination of a few factors. First of all, I would say the mentality of the people nowadays. I think, we have been spoiled, we have been used to the good life, and we have forgotten where we have come from, let's say, about 70 years ago. Certainly when you speak to younger generations, they don't want to talk about it, they don't want to know about it, they just think about making money and their future. This is a big cause of today's moral, fiscal, economical, and surviving problem. The other thing is that the lack of leadership. Thank you for your explanation about the older structure in Holland, but that has been going on, like you said, for the past 40 years. The real problem in Holland is that we do not have any politician, woman or man, who stands up and tells the people clearly what's all about. We live in the 21st century. Today it's 2013 and not 1950. Today we are shaping a new Europe, a new society. We have to do out-of-the-box thinking, and we have to stop talking only economics, because economics is not a mathematical science, it's a social science. And a lot of economics forgot about that greed is good. Remember, greed plays an important integral role in the whole formation of society and the growth of the economy, etc. So it's a lack of leadership, it's a lack of politicians. Today, Holland is an example that they stand up and they try not to tell the real message, they just try to tell some kind of a message. How can you build trust and belief from the people who should elect you? And third, I remember a president about 60, 70 years ago, he said, don't ask your country what you can do for me, but what you can do for my country. This is a man who said, I want a man on the moon in 10 years from now. This is what Mr. Rutte, our present Prime Minister, and all our politicians should do. And then remember, and mark my words, the people of Holland and most other peoples in Europe so divided will stand up, will believe, will start fighting and building, and will believe in their politicians again. And this is one of the big problems of our time, why we cannot solve this crisis. Thank you.
Okay, thank you very much. There were not only questions, but also remarks, but I hear some question in it. One for you. I heard the word spoiled. Are we too spoiled, the younger generation?
Well, I mean, there is a big deal of belief that there could be anything for nothing, and of course this is not true. I mean, this trend to rely on the government to sort out all kind of your problems, and also, well, all sorts of things where you think that it's somebody else who should take care after issues that are yours, first of all. So I would agree that there is a great deal of this kind of slippage from what, I guess, whether we are Dutch, Lithuanian, or German, or Swedish, or whatever, all our mums were saying that you should live according to your means. I mean, all the mums are the same all around the globe, and somehow we all tended to miss the point and think that there is somebody out there to pay our bills for whatever we would like to see. But there is some difference in the countries like Lithuania, basically, because one of the issues where you were talking to people and saying, look, we have this crisis, we need to cut pensions or all sorts of social benefits, there were groups of people who very much remember what is the Soviet lager and what is the Siberia and that sort of stuff. And they were saying, is this crisis? That was crisis. So this is there are some remainings of that experience in at least in countries like ours. So I think that helps a little bit not to lose the point to reality and to what is human in the economy, because I would agree that it's not just about numbers, models, LM, ASAD, and kind of shifting the curves and getting the results you want. It's more about how you manage this and the leadership. Yes, I would bet that most of the people would be keen to see a leader saying that we will be on the moon in 10 years' time, but somehow most of the leaders try to play the song that people would like to, at least they think would like to hear at current juncture, and that's how it.
I will put that issue to Mr. Hoogduin as well, because you gave us a high-speed lecture on the Dutch pillar system, and then you had to stop. But then I was waiting for the answer, because we don't have those leaders anymore of the different pillars. So do we need a real leader then? And what?
Well,
and who
I feel
might
now,
that be?
I feel tempted to say yes, we lack leadership, and to a certain extent that is the case. On the other hand, waiting for the leader to guide you is exactly what the problem. The problem is we, as I said earlier, we have come to expect others to solve our problems. And the prime example of that is asking for a leader to solve your problems. So I think you can go too far in that direction. I think the puzzle, if you agree with my analysis on, let's say, the governance model in the Netherlands, then the question is, what can be done, what should be done? I think if I look at what's happened so far, in some way the Dutch political landscape is not self-correcting in a way. We get new parties, but there's no new stable political landscape in a way. So what I think in the end would be necessary, but I have no clue on how to do that. There should be a kind of a reformation of the political landscape. What I would like to have is that we have three new, let me call them pillars. They are not pillars, but we have a let's say a social pillar, socialist or social pillar. We have a conservative pillar. That's the problem in the Netherlands. We have never had a really conservative party, and we have we didn't call it that way, and we have a liberal party. If you look at the political landscape, all these three, let's say, streams are represented, but in a very intransparent way. So you need a reformation. So I would like to have three main blocks, as it were, and then you may have a couple of smaller parties around it, where you I look with envy to the German situation, where you have a far more stable political landscape. So how to get there? I don't have the definite answer there. You may introduce, indeed, also a what is called a floor in the vote, so that you do not have too small parties. We may change the representation system. Introduce that you represent a district. That we may partly do. What may happen at some point, but that requires leadership, that the political parties themselves start to merge, and like companies would do in such a situation, there would already have been a restructuring there. So there, in that direction, and in the polar model, there again, the line by the current government is to revitalize it. I'm not sure whether it is successful, but the other is that you simply get rid of that and go back to the primacy of politics.
Okay, I got already a sign because we had to stop at 5:30 because someone has to catch a train, the other one has to catch a plane. But 5 minutes, it's okay? Because there are 2 more questions. The gentleman there.
Hi, my name is Konstantin Schiedis. Just a quick question about the political discourse in Lithuania in 2009 about the deficit. Because what role did the European Commission and the EDP procedure play in that discourse about the deficit? Did the government point to Brussels and say, well, we need to cut the deficit? Or did the government own the agenda and say, no, we want to do it on our, for our own reasons?
I must say that the EDP procedure started later than the government stepped into the office, half a year later, because there is a procedure. You need to have the numbers for 2008 first, which is end of April. And then we got the CDP procedure somewhere maybe in July 2009, and we've already had 2 rounds of cuts. And that was basically homebrewed. And there was a debate whether Lithuania should ask for a financial assistance from IMF and European Commission rather than rely on the market. And the decision by the government was to own the program, which is typically not happening when you have an IMF program, because then it's the bad guys in IMF and European Commission that are owning the program and are imposing this on the people. But the choice of the government was to own the program, whatever it takes. And so it owned the program. And the EDP was just a kind of a circumstance that you have the EDP, which you were supposed to have because the deficit breached the Maastricht limit. But that came long after there was a lot of mess around and a lot of have been already done.
Gentleman in the white shirt.
Yes. Hi, I'm Bart van Dijk. I study finance here in the Netherlands. And this debate was constantly about national politics, actually. And I didn't hear you anything here about European politics. If we talk about leadership, we talk about leadership in the Netherlands, leadership in Lithuania. What do you expect from leadership in Europe, actually? Can you say something about how that could influence politicians and also economics, actually? Do you expect anything from it? Or is that just a side effect that should we ignore and should we focus on the Dutch economy and Lithuanian economy?
I think it's a question for both of you here in the House of Europe.
Yeah.
And it's also the final question then. Do you want to start?
Yes, very complicated question. No, we should not exclusively focus on national policies. We still have, in my view, a euro crisis that is not under control, where we do not have yet a clear, let's say, point on the horizon. This is how we want to solve it. That is where we want to go. And for me, that is crucial, because we are in a historical process with fits and starts of further European integration, and I think the best way forward is to continue on that path. Perhaps not so quick as some people want, but I think the most dangerous thing, let me put it that way, that can happen is that by focusing too much on national issues, as we have done this afternoon. So I take your point, that at some point we will have a structural break in this important structural historical process, which I think has benefited Europe very strongly, and is now in a very difficult phase. But it would be a big mistake to drop that ball. So I think yes, but that deserves more than the 1 minute that I have now spent on it, but it's a very important topic, and actually I have to catch a train to enter into a debate on this very issue. But I fully take your point. You're right.
Basically, I have not much to add, and I think that this crisis actually showed that there is a clear need for European leadership as such, because the Eurozone, the construction of Eurozone was like, we are a club, and we are all kind of on our own in the club. There are some rules, and somehow it will all work out. And it appeared that this is not the case. And so without this clear leadership that there is some ownership of this monetary union at European level, there is no way that this can kind of resist the problems in the future. So of course there are all kinds of leadership that you can imagine, from federation to all the milder formats. But I think that this is actually the crucial idea, because I would agree that the crisis, at least the tensions around the Eurozone are far from over, and we will have this question on and on for several years in the future.
Okay, I want to thank you, both of you, because it was a very interesting debate, and not only a debate, there were also lessons, and I think we could all take some lessons with us. I want to also thank the audience for their questions. And despite all the austerity measures, there is some money for a drink. Understood?
That's the connection.
we will find it there. And thanks again. And I hope to see you again when the Dutch are in a good shape again.
So it will be like 4 R's: recession, reform, recovery, and reception. My great pleasure to see you in Brussels.
We will see each other in Brussels again, of course.
See you in Brussels.
Thanks a lot.
Thanks.